Hello and welcome back to another video. So today I want to talk about dividend growth investing strategies, alright? So basically the whole idea with dividends is that companies that make so much money, which, the big companies that are so profitable, sometimes they run out of ideas to create products, revolutionary products, such as some companies won't be making the next Tesla, but they're so profitable, they're so large, and they're so stable that what they end up doing is paying back their investors in the form of a fixed income, which is known as a dividend payouts. So when selecting a stock, you should aim for looking at stocks which have a relatively high dividend yield, okay? So you can head on to dividend.com over here and see which companies have the higher dividend yield, but also just in your whatever brokerage you're using, you can check that out. Okay, so the idea is that the higher the dividend yield, the more you'll get paid, okay? However, rule of thumb, at least for me and what I've done in my research, is that 4% is the ideal amount that you want to aim for, because anything over that, you'd think, why not just go for the highest amount? The thing is that anything over that could actually lead you to long-term losses, because although they could be paying you a lot, they might not be as profitable, and so even though you have more of a payout, it's maybe not as much as a company which has less percentage of a dividend payout but is more profitable and stable in the long run. So in theory, companies can pay dividends forever as long as they're still profitable, okay? So now this makes it a very interesting opportunity for us as investors, especially long-term investors, because we can use that money which we make from dividends. So dividends can be paid either quarterly or whatever the schedule is that the company gives, and then we can use that money made from dividends and then reinvest it back in the market. So it can either be in the same stock or it can be in different stocks, and that ultimately will grow and grow and grow over time, okay? So when you're choosing, some characteristics you can look for in a company is how long they've been paying dividends, how long they've kept up by keeping the dividends, if their dividend percentage payout has changed over time, has it increased, has it decreased, and of course looking at the fundamentals of the company. Is the company stable? Is the company profitable? How is the company doing in its specific market, in its industry, etc. You get the idea. So there are three main elements that you need to look out for when dividend investing, okay? So the first one is you want dividend increases. Okay, that's pretty self-explanatory. If it's a stable company and they're increasing their dividends every month or whatever it is, that's what you want, okay? That's ideal. Then the second thing is dividend payouts. You want more payouts, you want more consecutive times that the company's paying, and you want to have a track history where it shows that a company's consistently paying its dividend payouts, and it's a long-term thing and not just when it's doing very well because of one product or a short-term thing. It's something you want to look at, that they have a foundational aspect in the long run. And finally, the third thing is the actual share price growth of the stock. Okay, so the difference between this strategy and, for example, growth stock investing is that with growth stocks, it only focuses on the share price. It's not focusing on the dividend payout and the dividend increase. It's only focusing on the actual share price itself, if that increases over time. Now that's good, but if you're able to get all three of these, such as the dividend increase, the dividend payout, and the share price increase, then that's better in the long run, because not only can you expect the share price to go up, but also if that doesn't work out, you have the security of the fixed income coming from the dividends. And if the dividends don't come in, then you have potentially the share price going up. And if none of that's working out, then you need to do an analysis of the company and understand why that's happening. Okay, so usually what happens is that a dividend is paid to us and the share price of that company falls, but then over time it adjusts back and then increases. So you make your money back over time. So you can be paid a certain amount, you can make like $2 in dividends, and then the share price falls so that you actually go down $2, but don't panic, because in the long run it's gonna balance out and it's gonna go back to the same share price, if not further than what it was before. Okay, and finally, you want to make sure that you're in an IRA or an ISA account. Okay, they're the same thing, it's just a saving account that is tax-free. So you can look at different brokerages. Trade 212 even has one which you're allowed up to £20,000. You can look at Vanguard, you can look at M1 Finance in the US. I know Robinhood allows you $6,000, so maybe you want an alternative, something with more of an allowance. But overall, what you want to be aiming for is having these three factors, accomplished when you're investing in the company, making sure you do your own research and that the core fundamentals of the company is good in what you're investing. And once that happens, then you're going to tend to have stable dividend growth, stable share price growth, stable dividend payouts, and then every year it's going to increase, and you can start off with a small amount, even $100. As I said in yesterday's video, you can start investing in fractional shares. So choose companies that fit into this criteria, and then build up your way. The more money you get, the more you invest. The more you get, the more you invest. So keep that going, and then sooner or later your portfolio will be big enough that you're making up to $1,000 a month passively, purely on these dividends and their dividend growth. So I hope you guys enjoyed this video. Leave a like, comment any suggestions that you'd like to see, and I will see you all tomorrow.